7 live. There, hi, good morning. I'm glad you're here. It's 8:40, 20 before 9. Time to check in and find out how your money's doing this morning. Phillip Statler is in his office in downtown Sebring at Statler Financial Services. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. It's Friday. It's hard to believe that we only have less than a whole week left in this month of January.
It's gone awful doggone fast, but I said at the outset this morning when I started the morning show, this is one of those Fridays where, with the week this community has had, TGIF is probably more meaningful than any. Just to pass along information that we've been passing along for some time, candlelight service and memorial for the victims on Wednesday is going to be Sunday evening at Fireman's Field. I suspect we're going to have a packed house, wouldn't you guess?
I would think so, yes, sir.
I would imagine so. On to Wall Street. Yesterday was one of those kissing your sister days. We were down by 0.09% on the Dow, which is about as flat as you can get. NASDAQ showed some gains, and the Standard & Poor's was up by 3.5%. I'm sitting here saying I don't know what's going on, and I gather your analysts don't either. I don't know whether to say we're pulling out of a big dip or whether or not we're just having that slow grind downward where the peaks get lower every time.
Well, and if you go back and look at like 2008, this would be somewhat similar to that. We had a little bit of a downturn and then we bounced back before the big fall. Now, I'm not saying that's what's going to happen, Dave, but I think that we can't read too much into this bounce back right now. Especially given some of the headwinds that I think that we're really seeing now, that we haven't ever seen. The government shut down for over 33 days. The breakdown in the talks between China and the United States. One analyst said, hey, watch for the stock market to start to finally feel the government shutdown next week.
Yeah, it's got to. The other thing you got to throw into the thing is Brexit, because Europe is in a tizzy as well. I mean, we're kind of like we're fighting a war on three fronts at the moment with the economy.
We really are. And so how long can we keep it up? I don't know. And I don't think anybody really knows. Everybody's guessing. But I do know that the numbers, we get mixed signals from the numbers we're seeing. And so we will just have to continue to watch those data points and just kind of aggregate them as we go to kind of determine where we are.
That's kind of sort of what we try to do each morning here with things as the moving target continues. But yeah, the picture is just, well, greasy would be a charitable way to put the picture because nobody got an idea what's going to happen next. We do know earnings season has been a mixed bag, not bad, but not as good as folks expected to be. We were looking for some economic information this morning. As usual, the government shutdown is messing with the schedule. Durable goods scheduled to come out this morning. They're actually going to be released this afternoon at 1:30 because that tends toward being a really good forward-looking indicator. I imagine that 1:30 this afternoon, a lot of eyes on Wall Street will be looking at that report, wouldn't you guess?
I would think so, along with new home sales. I'm not sure when that one's going to come out, but that one's due out today. We have it this morning.
1:30 as well.
Okay, so everything's getting pushed off a little bit. I'm really interested in that because I think the real estate market is one of our key indicators at looking forward as to what the markets are really starting to think about.
Absolutely. As we've mentioned it before, the real estate and the housing market has a tendency to trigger so many other allied sectors it's worth looking at. Speaking of which, one of the reports that you had this morning off of the end-of-day reports on earnings season was one of the big home builders, right?
Yes, sir, it sure was. It was one of those big developers, D.R. Horton, home builder. They missed by about 2 cents a share. Revenue did beat the forecast, though. They said that the rising prices and higher interest rates have moderated the demand for new homes, and they're seeing a little bit of increase in costs. So they're trading down about 1.75% this morning, and they're not too far off of their 52-week low. I mean, they're going to open this morning right now about 37.60. Their 52-week low was 32.39. So, they're not real close, but they're closer than they are to the 52-week high.
That's are they closer to the low than the high?
Yeah,
I was
yeah.
kind of scratching my head at those metrics. If revenue is up, that's not necessarily bad news, and it kind of reinforces the point that, yeah, we're not doing badly. We just aren't doing as well as we'd hope to do. Sounds like a decent description of what they've got, right?
Well, yeah. I mean, they still had a profit. It's not like they're losing money. They just didn't make as much as what Wall Street thought they should.
Understood. Another story in the American industrial scene that fascinating right now because I've kind of had this theory for a couple of years now, and Intel is backing it up. They make the chips that are the guts of all of our PCs, and it always had the feeling that Windows 10 with all the automatic upgrades and everything, getting 2-3 years under the same operating system, folks weren't going to be changing computers quite as often. I'm starting to wonder if my prediction was true looking at their report.
Well, I think the other thing to kind of add to that, Dave, is how many people now don't really have a computer. They have a tablet. They operate off their cell phone. They don't upgrade their computers like they used to. Now they upgrade their phones and they'll upgrade their tablets, but not the computers. And I think that may be where we're getting some of this. But Intel, they beat for the quarter. They came in 6 cents a share ahead of what was expected, but they missed on revenue and they issued lower than expected guidance for this current quarter that we've got. And they're really pointing to seeing weaker demand in China. Let's face it, China buys a lot of stuff still.
Mm-hmm.
Is going to be a big indicator there. And so they're probably on your big losers list today. They're down over 6.5% this morning before the market opens up.
Yeah, they're getting their rears kicked. I saw a whole flurry of downgrades on Intel. Point taken, a lot of folks using tablets and cell phones to get along with their computing needs. Then you add on the fact that folks don't replace their computers as often when a new operating system isn't required. And did you ever think you'd see a major chip maker like Intel being having us being able to characterize them as saying they're falling behind the times, right?
Well, yeah, and so technology is one of those things that you've got to keep up with, and you would think though a company like Intel would have their pulse on what's happening, and they may have some R&D stuff that just hasn't come out yet too that they're still working on, and it may be slower than what they thought. Hey, talking
Neither
about
yeah.
that type of technology stuff, Western Digital came out.
Hard drive
Yep,
manufacturer.
hard drive maker. They missed estimates by 6 cents a share. They were still profitable, but they not as much as expected. Their revenue was slightly below what the analysts had predicted. Their revenue is actually down 21% from a year ago this time. What they're saying is that there's less demand for smartphone storage, which I find interesting because every time it seems like when I upgrade my phone, I go to more storage, not less storage. But they're not seeing that on as far as a general flow there, and so But here's what they've come out, because I was really kind of twisted on this one, because when we talk about where their stock is today, they're up substantially, and it's forward looking, right? They're saying that revenue will improve in the second half of the year, and they're starting to do some cost cutting. And so this one just really amazed me, Dave, because they're up almost 10.5% this morning.
You confused the crud out of me there, because I'm looking at Western Digital right toward the top of my leader list, and all you were giving me was bad news there. If the management shows that they're aware and they're paying attention, they get rewarded even if they do have a miss, evidently.
Well, and here's what I'm thinking, because I'm looking at the whole year schematic here. And so they closed yesterday at $40.14. The range that they have seen the last 52 weeks is the low has been $33.83. So they're relatively close to the low. Get this, their high in the last 52 weeks was $107.
Holy crap.
Yeah, exactly. That was my thing. So I guess the forward looking is an indication that maybe they're getting back on track and their stock can see some better quarters ahead.
Net basically gave them breathing room above their 52-week low, but they're still only about 40% of their highs. So that's a little more balanced picture of the stock, isn't it?
Yeah, it really is. Hey, I got two other popular names that I think we need to mention real quick because I know you got to go this morning. The first one's Starbucks. Starbucks reported a profit, 68 cents a share. That was 3 cents above estimates. Revenue also beat forecasts. And, one of the big key indicators, same-store sales, were up 4% from a year ago. That sounds pretty good to me. And they're trading up about 3.8% this morning. And then the last one I have, Dave, is another kind of financial. E-Trade Financial came out. And their estimated earnings were in line with what was expected. They did miss on revenue. And so they're getting hit a little bit this morning. They're down about 3.75% this morning.
Got to assume some of that is amateurs bailing out of the stock market for a little while till they figure out what's going on, right?
Well, it could be. You're right. That's a good point there.
I know E-Trade is big with the small pop amateur investor, and consequently, those are the people that would be smart to stabilize fast because they don't have any of the resources to screw around with.
Well, that's true. They don't, and a lot of times they're just getting their foot in the water and they don't understand everything. So they take a big hit and they start jumping out.
Understood. So setting the table for this morning, again, a relatively flat day on Wall Street yesterday. NASDAQ had a measurable increase, but basically Dow and the S&P were a tinge either side of the zero mark at the end of the day yesterday. 45 minutes before we open this morning, Phillip, how are we looking so far today?
Man, we got some great green ink this morning, Dave. The Dow's up getting close to 200 points right now. The S&P 500 is up 21.25. NASDAQ's up 73. Gold's trading up almost $8. Excuse me, Dave. Sorry about that. Silver's up about 20 cents. And crude oil, man, it's making a move up. It's up to $53.24 a barrel.
All right. I haven't checked the overseas information as to why that's happening, but Asian markets all closed up, and Europe is up substantially too as the day progresses over there. So by and large, we're singing happy days are here again, at least for a couple of hours. Phillip, if anybody wants to find out how to stabilize their finances, maybe you were one of those E-Trade buyers that bailed out. Solid advice as far as how to make retirement work for you. How do I get you on the phone?
Dave, give us a call at 863-382-0037. Dave, yesterday I was having a conversation with a prospective client. And one of the things we started talking about was how long has somebody been doing what I do, right? There's so many new people in our area that have never gone through a down market. And fortunate or unfortunately, we've gone through 2 down markets here at Statler Financial. And we understand what it takes to be proactive. So follow us on our website at statlerfinancial.com. Follow us on Facebook at Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, where we impart a lot of our knowledge. Noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
All righty. I'd say something about, you go with the kids for your poker money. For experience, go to Statler Financial, but I don't want to typecast you as that old, Phillip.
Well, yeah, not old, but experienced. How's that?
I like that a lot better. Have a good weekend, my friend. We'll see you on Monday, all right?
All right, thanks, Dave.
Thanks much. It's 105.7 Light FM.